Hello, welcome to Yolo Crypto. My name is Daniel Scott Jacobs. Today is Saturday, February 8th, 2025. Today we're going to talk about how to structure a portfolio during an uptrend. What percentage of certain assets should you have in your portfolio to be prepared to take advantage of the upside? Let's get started. So, the reason you want to do this is for obvious reasons. You want to protect yourself from downside and participate in upside gains. Okay. Now this is like a relatively well known thing if you pay attention to crypto, but it's infrequently practiced. And what I mean is like everybody knows you should probably have. Now this goes with stocks. This goes with crypto. You should probably have blue chip and better performing assets in your in a bigger percentage, right? As opposed to more risky altcoins and meme coins and things like that. Few people do that. I never did that. I do it now. What I mean is I never did. Like back when I first started, I would listen to a cryptocurrency YouTuber or a cryptocurrency influencer, and like whatever coin they were shilling, or whatever new meme coin came out, whether I missed a huge uptrend or not. Like a lot of times you find out about these things after they've already blown up and they've already done the bigger percent of the gains they're gonna have, right? Because they have no utility. But that's what I was doing. I was just throwing money into that. So that is not what you're supposed to do, and I'm going to explain what you are supposed to do in this video. Don't be penny smart and dollar stupid, okay? You see this gentleman here. He's very happy because he does what I do. He's dollar smart and he's penny stupid. Yes, that's it. It's your responsibility to manage your own portfolio. Nothing feels better than winning a trade because you made a plan, followed a plan, and sold when you planned. When you're in an uptrend, right? Here's the thing. If you've made it this far and you're into cryptocurrency enough to where like you're trying to figure out how to structure your portfolio, you've probably heard of the 4-year cycle, right? I think we're gonna have a diminishing appearance of the 4-year cycle because of institutional and regulatory adoption and just crypto now being mainstream, because we're here, people. Like mainstream is here. So then we're going to see diminishing of that. However, that we're in a bull market right now. We're in an uptrend, right? Presumably so, right? That's how I'm positioned right now. And you know that a downtrend is going to eventually come, right? So a smart thing to do would be to sell. Now, if you're a long-term holder, because let me explain this. I have Bitcoin, Ethereum, and some other altcoins that I will never sell. Okay, I have them in a ledger, Stored Courage wallet, and I'll never sell them. I don't care what happens. However, more than half of my portfolio I'm prepared to sell. Okay, eventually, as I continue to stack the bag in which I'm not selling, like soon it will be like I'm now ready to sell less than half and now a quarter as my long-term bag grows. But as of right now, it's overweighed by the positions I'm ready to sell, right? Because I know the markets eventually go down. Now we're gonna talk about like trying to time the top, which is a losing strategy. Now there's dollar cost averaging, right? When you purchase stocks or crypto, but there's also like the reciprocal of that, which would be selling, right, to essentially try to get the highest average for your assets. Right now, we're going to talk about that a little bit later in the video, but let's move on. If the cryptocurrency market is trending upward and is expected to continue for the next year or longer, structuring a portfolio involves balancing risk and potential returns while maintaining some diversification. Here's a suggested framework, okay? Core holdings, 50 to 70%. Now, let me explain this. If you know a ton about cryptocurrency and you're actively day trading or trading quite a bit, you might be in and out of. You might have a long-term bag that you don't sell, which I would recommend everybody have. But these core holdings, like as you know more about crypto, I think it's my opinion that this 50% could be as low as 30%. You know what I mean? If you know a lot about the coins that you're buying into, right? So let's read what it says here. Bitcoin, BTC, and Ethereum, ETH. These are market leaders and tend to move more predictably during upward trends. Bitcoin is often considered a store of value, while ETH powers the DeFi and NFT ecosystems. Split this allocation between BTC and ETH, 40%, 30%. These assets provide stability in a volatile market. I wouldn't argue against you if you said, I don't even put Ethereum in this, I just do Bitcoin. Mine's just Bitcoin, right? And the reason being is because Bitcoin's a store of value, right? All the first ETFs that got approved were all Bitcoin. Michael Saylor is big on Bitcoin. Robert Kiyosaki talks a lot about Bitcoin. A lot of big names, and when institutional investors get in, they're just buying Bitcoin, right? You don't hear anything about an Ethereum strategic reserve. You hear about a Bitcoin strategic reserve, right? So I would think that Ethereum, for me, is in the next level. I put it as the first two, just because Ethereum has the second biggest market share and it's been around for so long. But Bitcoin is really the one you want to have a bigger position in, right? I would be a lot more comfortable if this said 50%, 20%. 50% Bitcoin and 20% Ethereum. Let's move on to the next category. Growth, altcoins, 20 to 40%, okay? Allocate to projects with strong fundamentals and adoption potential. Look for altcoins tied to trending sectors like Layer 1 platforms, Solana, Avalanche, Cardano, Ethereum, Tezos, Polkadot, right? And you can find out Layer 1s just by Googling it, right? Or I'm sure CoinGecko mentioned something about that, or CoinMarketCap. DeFi tokens, Uniswap, Aave, Curve for decentralized finance growth. That's another good thing you should be into. Gaming and metaverse projects. Gaming's not going anywhere. The metaverse was there was a lot more hype about it last bull run. However, the metaverse is coming, so you do want to have some metaverse exposure. This would be Axie Infinity, Sandbox, Render. Damn, there was one I was just going to mention. I forget. If that sector is booming, right? Notice how it says if that sector is booming. But then again, if that sector is booming, you've already missed out on the gains. So don't wait for that. Have some exposure to those coins. And when I see some exposure, you might own, a couple $100 of, depending on, what your wealth is. But you might just have one position in one coin, right? And that would be some exposure, right? That's what it's about. Because it's not about, like I used to be the guy who wanted to throw all his money into the next meme coin that was going to blow up. Because I've seen it happen. Right, I've participated. Like I was big on AMC. Like I hit that one out the park. One of my friends hit Dogecoin out the park. So like I know it can happen. I've experienced it. I've seen it, and like I would love to do it again. So, but don't like catching those things is trying to catch those is so risky that it's just not worth it to YOLO into one of those things. Even though this channel is YOLO Crypto. Crypto is the biggest opportunity there is. What I mean by YOLO is crypto is the biggest opportunity there is now. So what I really mean is, like, if you're, like, not doing great financially and, like, you feel like you're behind, or you feel like, man, I should have saved more money, or, like, a lot of my friends have houses I don't, or, like, someone just bought a new car, my car's old. Like, if you feel like you're behind financially, cryptocurrency is what is going to bring you up to your other friends, right? Cryptocurrency is what is the biggest opportunity right now, and I'm trying to, push people to get into it because it's not going anywhere, and this thing I'm so sure of. Right? Again, like, you can say I'm wrong, right? Maybe I'm wrong, right? It could go to, all this shit could go to zero. But, my exposure is 100%. I've got very little in my bank account, right? Right now, all my money's in crypto. Again, I actively manage a portfolio. There might be some stop losses on certain things, but I'm all in on crypto, right? Because I am one of those people who was financially behind at one point, and crypto brought me up to par, okay? Next one I have, this one's actually not in bold, but AI related coins. This may fit into the next bracket we're gonna get into. Not really, but I'll explain in a second. So AI related coins, that'd be Fetch.ai. These are by market cap. So Fetch.ai has the biggest one, then Ocean Protocol, then Singularity Net, and all these market caps are below $1 billion. So much room to grow with these, right? Maybe considered a little riskier than growth altcoins, right? Because AI is so new, and we have no idea. Like CZ made a post about like AI and crypto merging together a couple months ago, and AI coins like blew up. Like that was their big run. But I'm telling you right now, you're gonna see explosions in AI coins, especially once a coin or project or a blockchain comes out with some actual utility. Or if ChatGPT said, "Oh, we're gonna be working with Fetch.ai," right? Psh, that shit would blow up overnight. So something to definitely research on and pay attention to. But again, I think you should have some exposure to AI related coins, and I probably would put it into this growth altcoin category, because the next category we're gonna get to is stable coins. Stable coins don't move. Okay, they're usually pegged to the dollar, they stay there. Okay, and this is the reason why you should have some. But then again, you will run out if you follow this strategy. Keep a small allocation in stable coins, USDT, USDC, for flexibility. This allows you to buy dips during corrections, take profits from speculative plays, and park them safely. Now, I'm not selling anything right now. I'm waiting for the market to get bigger. I want to see Bitcoin have some higher gains. And based on like the pi cycle indicator, fear and greed index. This is things that I base it on. I watch other YouTubers. I do a lot of research myself. Well, oftentimes what I'll do is I'll like do the TA that I know, look at the statistics that I know, that I follow, and then I'll watch other YouTube and kind of see how we pan out. Usually it's relatively similar. But you do want to have some stable coins on the side, and if you're actively in and out of positions, then you know the stable coin. I wouldn't keep anything in USD, right? Stable coins aren't going anywhere; they're not going to go below $1. So you're safe in stable coins. So if you're selling positions, I would sell into stable coins as opposed to USD. If you're a lot of times, like if you're on Binance, you actually can't even sell into USD because they don't allow linked bank accounts right now. You can transfer crypto in and out, but you can't actually put money on in USD or take it off in USD. But even still, if you were like, let's say you were buying, let's say you were given like $100,000 and you were, okay, build a cryptocurrency portfolio, keep 10 grand on the side to buy dips, right? Now we have some tips right here. Important things to consider: risk management, avoid over leveraging even in an uptrend. Okay, I don't play with leverage right now. It's just not something I'm into at this moment. But if you do, just be careful with it, right? Set stop losses. You don't want to get liquidated. It sucks. Keep position sizes reasonable to minimize losses if market unexpectedly reverses, right? Some people argue the top's already in. 100 grand's the top, and we're going down from here. I don't think so, just based on hype. I mean, even if, let's say this was the top, you're telling me we're not going to get above 100 grand? Well, like, even if the market does start to go down, if Trump comes out and says, yep, we're going to have a Bitcoin reserve, you tell me the market's not going to come back up? Come on. Another thing is, too, is like Trump has a lot of money in the market right now because he has Trump coin, right? So most of his wealth is in cryptocurrency, right? Technically speaking. So you think he's going to let his coin go to zero? I don't think so. Rebalancing. Periodically review your portfolio and rebalance. If a speculative token grows significantly, consider taking profits and reallocating to core holdings or stable coins. Boom. Now, it would almost make sense to be like, yeah, you know, altcoins went up a lot and I sold and I bought Bitcoin, but it's usually the other way around. Usually Bitcoin will top and then the altcoins will top after, so that might not be the best strategy. It will eventually, because once we bottom out and the bear market we find support and we start to come back up, this may be years later, usually is, that's when you'd want to do that. Okay, next one is stay informed, follow news, trends, sentiment to spot opportunities early. Subscribe to this channel. Okay, we're gonna have more videos coming out. I'm gonna start to do either live stream or a daily news update. This channel's new. I've been in crypto for a long time. I want people to get into crypto because I was where a lot of people were. I didn't have a lot of money, and now I'm doing very well. I've got a 4-family house here. That's because of crypto. Okay. It's the biggest opportunity right now, and you're not going to have another opportunity like this probably for the rest of your life, so I want people to take advantage of it because now is the time. Exit strategy: set price targets for speculative and growth assets and stick to them. That's another thing. It's hard. It's going to be hard to set price targets, right? But if you're looking at altcoins, pick a 3 to 5x, right? You may have already done that. You may want to do it now, but just remember, alt season, right? Traditionally speaking, comes after Bitcoin tops, right? So you'd have to do TA of yourself. I'm not going to get into it right now, but you have to figure out how much does Bitcoin come and go down. What warning signs are there? Watch crypto YouTubers. Biggest one, the one that I like to watch the most for TA is Eric Crown Crypto. Okay, just type in Eric Crown. He puts out a video all the time. He's very, very good at TA. He does it for a living, along with YouTube, but he's the best one to watch. And that is the video that I have for you. If you follow this portfolio strategy and you set price targets, even if you sell and the market goes a little higher, who cares? You might be disappointed if you sell and it goes up another like 2 or 3x. Sure, who's not going to be disappointed? But still, you've got to have some type of strategy if you plan to sell. If you're a person, even if you're someone who plans to buy and hold for the long term, this strategy is going to work for you. Even if you don't plan to sell, this strategy is going to work for you, right? People who are trying to really take advantage of the market and build their portfolio, and take the most advantage that they possibly can, probably have plans to sell at some point. I do with some of my positions, like I said, right? But that's almost gamifying things, right? I do that for fun also. But you do what you're comfortable with. That's the video I have for you. If you made it this far, I appreciate it. If you could subscribe to the channel, that would be great. Hit the like button, whatever. Put a comment, blah, blah, blah. I appreciate it. I will see you in the next one.